Hello, everybody. Welcome to SVA's nonprofit webinar panel presentation, 3 topics for 2020 success. Hi, my name is Lee Schwartz, and I'm going to moderate today. On behalf of SVA, I hope everyone is doing well, and I'm glad you're able to jump on. Well, we're going on 3 months, maybe a little over 3 months since COVID first hit, and needless to say, it's been an adjustment. We've been doing almost weekly webinars on the PPP loan program and other changes that have been top of mind for everyone. And I know many of you have had a chance to join us for those. We hope you found them useful. Many of us over the last few months have been flying by the seat of our pants. And now we find ourselves almost halfway through the year with many of the strategic plans we put in place 6 months ago no longer making any sense. So today, we want to spend some time and look forward. We've got 3 panelists that are going to help us do that, and they're going to cover 3 very different topics. Our first today is going to be Jenny Jeffress. Jenny is the Executive Director of the Madison Public Library Foundation, and Jenny's going to share how she transitioned one of their major fundraisers to a virtual event. Jamie Dressler is a certified financial planner and wealth manager with SVA Wealth Management, and Jamie's going to talk about strategies for educating your donors on the tax-efficient ways to donate. And lastly, we've got Kirsten Houghton, CPA, MBA, principal and shareholder with SVA Certified Public Accountants. And Kirsten's going to have the exciting topic of how to make your audit successful in a remote working environment. So 3 very different topics. We're glad you're with us today. Our plan is to save some time at the end for Q&A. In order to submit a question, you can open up the chat function at the bottom of your screen and address your question to all panelists. And just to let you know, we are going to save all the questions till the end, as it tends to work better with a webinar format. Also, we are recording this webinar today. You will receive an email with a link to a survey, as well as our SVA resource page where the webinar recording will be available. With all that out of the way, I'd like to kick it off to Jenny.
Hi, everybody. Thank you for having me today as part of this presentation. It's very timely. Because we just did our, what I would say is kind of experiment with a virtual event idea last week. So I'm happy to talk through how Madison Public Library Foundation has responded to the pandemic and to efforts to kind of move things forward right now. The next slide is about nonprofit events and our reaction. So obviously none of us planned for a pandemic. Very interestingly, at the end of February, we hosted a gala opening our Pinney Library on the East Side. And we managed to get that under the belt, and the Pinney Library opened before the pandemic hit, as that had been a really long time project, and we're so happy we got to do that. So while we didn't plan for a pandemic, we did financially plan, I would say. Our board does have a policy to have a 6-month cash reserve. And we certainly were kind of prepared for maybe somebody like me to get hit by a bus, but not necessarily a pandemic. So, but that's what we kind of were thrust into. We all went to work at home on March 17th and the library's closed. So we usually host about 3 big events a year at Madison Public Library Foundation. They support our Wisconsin Book Festival, and they also provide unrestricted funds for the foundation. So on your average year, it might be about $115,000 to $120,000 of $1 million budget that comes from events. So it's actually, you know, over 1/10 of our income comes from events each year. So we couldn't just say like, we're not going to do them and that's okay. We actually really had to think about what to do next. So at first we postponed our event. We had an event planned for May, which is called our Lunch for Libraries event. And we always have an author come talk. We had announced it would be the food critic and New York Times journalist, Mark Bittman, who's written about 20 different cookbooks, that he would be our author. People were very excited about him. We'd already aligned all of our sponsors. So, you know, it was something we were planning on anyway. So we knew that that was kind of in the pipeline, but also in the spring, we do some other events. So we do an educational series. Most often it's about planned giving topics, but it's also about things like healthcare, or we did one on financial planning as well. So we do events like that that are educational events, and we also do what's called our State of the Foundation address. So we do our annual report in about April. And when we release that annual report, I actually do kind of a speaking event with our major gift donors and a reception. And we usually do that in the spring too. So when the pandemic hit, we took a step back, we postponed Lunch for Libraries, and we decided to undertake those educational and donor recognition events as virtual events. I must say the attendance was really good. Our first educational event, we had probably 120 or so participate in a virtual educational event. And our State of the Foundation, I think we had something around 80 to 100, I don't exactly remember, come to the State of the Foundation event. So we were really pleased by the numbers of people who were willing to participate. And we did surveys after each of those events to get more feedback from our donors and friends about what else they would like to see. The other thing the foundation really does fund is programs at the library, and all of those were really halted. We did raise some money for virtual or digital collections and virtual programs, some of which are going on right now. So we are continuing that, but obviously the library is a program-rich space, and we weren't able to continue that during the pandemic. So we reformed our event ideas. The first thing we kind of had to do was choose a software. We're using Zoom here, which is great. We use Zoom internally on all of our things that we do for meetings and board and committees, et cetera. But we actually chose a different format. It's more of a webinar format that we would use for our author series. So kind of our Wisconsin Book Festival chose a program called Crowdcast, which is a good webinar format that's pretty secure. So as I mentioned, we hosted some of these other things and we kind of experimented with some software. And since those were free events, it was a really good time to kind of try things out and see what would work well for our audience. We did get calls and concerns, and people had a hard time finding links. And, that's part of our job, is to work with our donors and make sure that they can access what we're doing. But during those experiments, I think we learned a lot with those free events, so that when it came time to do a fundraiser, I think we were better prepared to actually undertake something and work with our donors to make sure it was successful. So the events through 2020, there was a point at which we decided that pretty much in 2020, we're going to do all of our events online. I know we're all kind of creeping back into other parts of our social life, like restaurants or things like that, or even the Union Terrace is opening this week. I think those are all things we're excited to see happen. But we just don't think it's viable that people, normally at some of our events, we would typically have 500 plus people in a room together. And we just don't think that that's viable in 2020. So all of our events are online this year. And we just didn't think that we could handle having people be socially distanced and really manage that. So normally we would have a big event in the fall that's like a beer tasting, food tasting event that has over 500 people attend. And then we also have, a summer event that we usually do too. So we knew we just couldn't undertake those. So we decided that once we kind of figured out we weren't going to be doing events in 2020, we were going to have to figure out new methods. We decided to go ahead and rebook Mark Bittman to do a virtual lunch for libraries. So we knew it would kind of be an experiment. We redrafted the budget and we started reaching out to sponsors to see what we might be able to do. So we set a date for June 18th, which was just last Thursday, and undertook doing a virtual event with Mark Bittman. So I think the challenges for the virtual events is that I think we're all getting a little sick of doing online events. Like we're doing Zoom meetings and we're getting a little bit sick of it. So maybe it's like we do that all day. Do we want to do that for fun too? So I think that's one of the challenges that we anticipated. There's also no social interaction. Like I love Lunch for Libraries because I get to see so many of my donors in one place and chat with so many people. So I'm always really sad that we couldn't experience that this year. But that was one of the hard things we had to accept. We also got a little really clever ideas from our volunteers who work on this event. We have a great committee of volunteers who help. A number of them were talking about all ordering a meal from the same restaurant, so they were eating the same thing while watching the webinar or watching the luncheon. or some of them were all making a Bittman meal that they were all going to have simultaneously, or some people were just going to FaceTime during the luncheon so that they could chat with each other while the presentation was happening. So really creative people thinking about ways to kind of bring the community aspect back to our Lunch for Libraries event. So the upside, if those were the challenges, is that we actually raised over $45,000. So I got real numbers this morning. We grossed over $45,000. So we probably will have netted about maybe 41 or something like that by the time we figure it out. We maintained about 90% of our sponsorships once we decided to do the virtual event. We reached back out to all of our sponsors, just wanted to see if they were still committed. We had a few that declined and decided that they were putting their resources somewhere else. But we did get most of them to commit to the virtual event, especially including our presenting sponsor, which was fantastic. Most of our table captains returned too. There isn't really a table when you're doing a virtual event, so that's kind of hard. But most of our table captains were able to bring in 7 people in themselves and host a table. So it was great to have the commitment of those people, many who have done it year after year. And then there were new guests and new donors from all over the country. So that's one of the great advantages of doing an event virtually is we have donors who live elsewhere and we have friends and family members who live elsewhere. So we really broadened our audience to a much bigger group. So we kept Lunch for Libraries alive for another year. We had over 400 people attend virtually, which is fantastic. We usually, like last year we did the event at Monona Terrace. We probably had about 550 people attend and we netted over $60,000. So this number is definitely lower than the year before, but 2 years ago, we actually hosted it at the Overture Center. We only could seat about 420 people, and we also netted around $40,000. So last year was, a little bit fantastic for us as the event really grew, and this year it went down a little bit. But I think if you look at the long-term history, what we raised this year for a virtual event is pretty close to what we raised for every other year. So we're really pleased. We're very excited. We got a lot of good feedback. We did have some technical glitches along the way. We tried to straighten those out. I think that's what's really hard is people are paying money and you want them to be happy with what their experience is. We did mail books from Mark Bittman, his newest book, to every single one of the donors who bought a ticket. So everybody's getting that book in the mail. So I think that adds something kind of tangible to what is a virtual experience. So that was kind of our experience with piloting what I would say a virtual event for us. I don't think I'd want to do this forever to do virtual events. I think we're in a time period where we're going to get creative and thoughtful about how we can do that and how we can kind of sustain support and keep donors involved. But I think what our experience was is that people really still wanted to support the library. They enjoy hearing authors talk virtually. And we benefited from that by doing a fundraiser that was successful for the Madison Public Library Foundation. So I will answer questions at the end, but I am now going to turn it over to Jamie so that he can take on his part of our presentation.
Thanks, Jenny. So the midsection here that we're going to talk about, middle section of the presentation is we're going to talk about charitable giving. And one of the things that I think I experience and many at SVA experience is that as our clients go through the exercise of considering whether or not to make a charitable gift, they spend significant time and effort and energy on who to give money to, how much to give money to, or to however they're going to help their particular charity, deciding whether or not, which charity are you going to make the gift to. There's lots of thought and effort that goes in on the front side to distinguish where the money goes. But what we don't see enough of, frankly, is to understand and that those that want to give money to charities, we don't see them thinking enough about how to give it. The very simple fact is that, and again, kind of an extreme example, but the very simple fact is that you can give a gift and a donor can give a gift and it can save them 0% in taxes or it can save them up to 50% in taxes. So if you have a choice, why not try to find the gift method that allows you to save as much tax as humanly possible? And on the next slide, I'll start to overview how we think we can help people, and you can help people to think through that process. So I like to start with, if you will, an analogy. And in the center of your slide, that what you see is lake checking. Okay, all those little bubbles are little lakes, and all the streams that are connected are supposed to be little streams that connect them. And if you think about all of our households and how people function in life, lake checking is the repository of everything in one's financial life. Money comes in, whether it's from work, whether it's from Social Security, if you're retired, whether it's a Roth IRA, pension, et cetera, et cetera. All of the income that comes to a person's household comes into your checking account. Then, of course, not everything that we receive into our checking account we get to keep. We have to pay for things like monthly bills. We have to pay for our property taxes. And hopefully, there are people that want to make some charitable payments as well. And so that is generally the paradigm that people fall into on a regular basis. Hey, if I'm going to help a charity, I'm going to cut a check and I'm going to give it to them. And that's very helpful. The charity really appreciates that. But I think we can do better. I think we can help donors be more efficient with that process. And next slide, please. And the very first process that we want to talk about is qualified charitable distributions. And the qualified charitable distributions becomes one of those methods where you can extend the tax benefits on a charitable gift in a very meaningful way. And I like to think it has this great 1-2 punch for most people that are eligible. The 1-2 punch functionality is that if you use a qualified charitable distribution, which is giving money directly from your IRA directly to your charity, you get to receive an income tax deduction, as well as you might see some benefit on your Medicare Part B premiums if you're over age 70 and a half. And so while that's a little bit of the benefit, what we often see people do is they receive money from their IRAs into their checking account, which means then they need to pay some tax on what they received from their IRA. And then maybe what's left, or a portion of what's left, gets to go to the charity. And so you'll see on the next slide, the way that we hope we can get you to think about it is break that paradigm shift for you and your donors, and help them realize that if they can make a donation directly from their IRA, directly to the charity, it's significantly more beneficial for the donor. Because again, like I had said a little bit earlier, it allows you to avoid paying income tax, as well as it allows you to have possibly a reduction, or at least not an increase, in your Medicare Part B premium. Okay. Next slide, please. And so, like all great things, especially when they revolve around taxes, there's always the rule, the exception to the rule, and then the exception to the exception to the rule. And so while at a high level, these things are very straightforward, there are always lots of particulars that you need to make sure you address to achieve the tax benefit that you're going after. And it's really important that these are, clear to your donors in that process. The first is that in order to make a qualified charitable distribution, you have to be age 70 and a half. So you have to be what used to be required minimum distribution age, but you have to be 70 and a half now to do that. You can give up to $100,000 a year using this methodology. And again, like I said, breaking that paradigm shift, the money cannot go into your checking account. It needs to go directly from your IRA, directly to the charity. Now, the other thing that, again, is interesting about the qualified charitable distribution is, like I had said, is it does not count towards your taxable income. So it is as though, from a tax perspective, it never occurred, meaning no withdrawal ever occurred from your IRA. So from a tax standpoint, if you're over 70 and a half, frankly, it's pretty hard to beat this methodology of giving. But there's a really unique twist with the CARES Act this year. And that is that if you're over age 59 and a half, you might be able to stretch and capture some of the benefits as if you were over 70 and a half when it comes to charitable deductions or a charitable distribution. Everybody's circumstances is different, so it's really important that before you do any of these, that you make sure it works for your circumstance. But the opportunity is that with the passage of the CARES Act, what was allowed is that if you make a cash gift, 100% of a cash gift can be deducted from your adjusted gross income this year. That's not normally the case. Normally it's 60%. And so because of that, it's possible that if you're over age 59 and a half, you might be able to extend and get a big chunk of what is a qualified charitable distribution for somebody over 59 and a half by doing the same thing by taking a withdrawal out of your IRA if you're over age 59 and a half. Everybody's circumstances is different, but it's a really possibly a very unique and very effective way to gain some additional charitable contributions if your circumstance fits. The next topic that we're going to talk about is managing cash and stock gifts. So we're all very familiar with cash gifts. Again, you take money from your checking account, you give it to a charity. But the opportunity this year with cash gifts that's a little bit different is that if you give a $300 cash gift and you don't itemize your deductions, you get to have a full above the line deduction for that gift. Again, that's as a result of the CARES Act for this year only. So it's something to take advantage of for those that are interested in giving gifts, in that $300 possible range. But if you're interested in giving a gift that might be larger than $300, the next way to consider giving is by giving direct stock gifts. And what I mean by that is, again, back to our paradigm shift. We want to skip lake checking. Maybe you were 3 or 4 or 5, 20 years ago, hopefully all of us 25 years ago were wise enough to invest in Apple stock, that is. And as you know, Apple has appreciated significantly in value from the time that you may have bought it 20 or 25 years ago. And so it has a significant capital gain on the value that you purchased it for. And capital gains are subject to capital gains tax. But you can avoid paying or eliminate paying the capital gains tax if you give the entire stock directly to the charity. And while we're using an example here of appreciated stock, hopefully Apple, because you've all been wise enough to invest in Apple, it can also apply to any appreciated security, appreciated real estate, appreciated art, farmland, a farm, anything. So any appreciated asset can be given to a charity. You have that ability to do so. And so we'll show you a little bit on the next slide of how that can benefit you to compare the two types of gifts. So on this slide, we're talking about the benefit of the two different types of gifts. On the right side, if I give a $10 cash gift to a charity, it's possible that I could save about $3 in tax. And the reason is because I have the possibility of reducing my income taxes by using that $10 cash gift. And so maybe I reduce my income taxes by $3. Now, if you look on the left side of the slide, what you see is that if I give an appreciated stock or appreciated security of any type, if I paid $5 for that stock, and now it's worth $10, and I give that entire $10 to the charity still receives $10, but I get to a reduction on two kinds of taxes. I get to reduce my income taxes, and I get to reduce my capital gains taxes that I would have otherwise had to have paid. And so for the same $10 gift, you can see that in one instance, you're saving 30% in tax, and in the other, maybe saving 50% in tax. Now, everybody's circumstances is unique, but it's important to note that you can really extend the tax savings available to those who give by having them consider giving gifts of appreciated securities. Okay, next slide, please. Now, the last category is really an extension of stock and cash gifts. And it's a fantastic tool called a donor advised fund. And what a donor advised fund is it's a tool that's created, a financial tool that allows you to separate when you receive the tax benefit for giving a gift and when your charity ultimately receives a gift. Okay. A tool like a donor advised fund can be used in many circumstances, but one where we see it used the most is if a donor has a year or maybe is in their highest income earning years. They likely are in their highest tax bracket years of their life as well. And so, if that's the case, there is no more tax benefit. The largest tax benefit for giving a gift will occur when they're paying the most or the highest tax rate in their lifetime. And so what they may do is if a person was giving $5,000 a year to a charity, or excuse me, to a church, for example, or a charity, whichever you were giving to, you might say, I'm going to give $5,000 a year to my church no matter what. But what I'm going to do is I want to get the tax benefit for the next 5 or 10 years of gifts to my church this year. So I'm going to put $50,000 into my donor advised fund this year because I get to deduct that to the extent it's deductible off of my income taxes this year while my income tax rate is really high. And then your charity continues to just receive $5,000 a year as if nothing ever occurred. Okay. And that process of separating the two timing, those two events, can really lead to some significant tax benefits for people that do tax planning around their charitable giving. The other fantastic benefit that can occur with donor advised funds is to extend out what a person might consider giving. And I'll just use a very personal example. My mother-in-law had a bunch of tractors of all things, yes, I know, tractors on her farm that she had wanted to give away. She wasn't using them anymore, but she thought she could use those tractors and give them to her church. Well, who would have ever thought of giving your tractors to a church? But she did. It was fantastic. And we went through the exercise of finding out, hey, can you actually give, instead of giving the tractors to the church that doesn't necessarily know how to handle tractors, could you give those tractors to a donor advised fund and get the tax benefit from doing that? And the answer was yes. And once the tractors were given to a donor advised fund, then the donor advised fund sells the tractors, converts those assets, illiquid assets, to cash. That cash then is essentially put into an account that the donor can suggest to make a cash gift to the ultimate charity. So that process doesn't work well just for tractors, but it works well for real estate, apartment complexes, farms, paintings, other collectibles. Anything that is highly appreciated in value can make really good sense to give through a donor advised fund. So it becomes a mechanism for illiquid assets as well to consider. So that's everything about the kind of high level overview of charitable giving strategies. Next, we're going to turn it over to Kirsten for her section of the presentation.
All right, hello everyone. My name is Kirsten Houghton. I'm a principal at SVA and I head up our nonprofit services group. So as Lee mentioned, I'm going to talk to you about the very exciting auditing in a remote environment. So it's a good topic because we've all had to adjust and get a little creative. So when I'm talking about this, you'll find that I'll say what we would do as if you were our client. I know not everyone on this webinar is our client, so just think along when you're meeting with your own CPA firm on the topics I'm going to discuss and the ideas I'd like to share with you. So since mid-March, we have been auditing remotely. We always did a lot remotely anyway, so it wasn't on our end too bad of a change to really go all remote. It was more difficult for some of our clients, especially those that are really paper focused. So some of the things we have to think about is how can we be more agile and creative and also very cognizant of the challenges that the nonprofit organizations are facing and going through. We have to perform these audits. We have to comply with auditing standards. So we've been asking our clients to work with us in different ways than we have in the past. Everything has been remote. So we've used Zoom and other virtual meetings. We've done conference calls. But we've even gotten creative, like how could we test inventory? Because that's a very hands-on in-person type of thing that we do as auditors, and talking about video and how that could work. We talk about electronic transfer of documents. Just because you can do it easily, you got to make sure it's secure. So that's the key thing there that I'll go into in more detail later. And then even picking up paper documents, which we have had some clients that really everything is paper. And finally have just come to the conclusion that we would schedule a time and meet and pick up all while observing safety measures as well. So just to start off the talk on limitations to consider, looking at our next slide. So some things I wanted to share with you. We've got different things that we want to consider, looking at physical inventory observations. And I bring that one up. Not everybody has inventory, but because that's a tricky one since that is so on-site type of thing. So with that, we'll go into that. Accessing client records, I just touched on briefly. Understanding and testing internal control, which is another very hands-on type of situation. Confirming account balances with your third parties, and I've got a recommendation for that. Performing any subsequent procedures dealing with COVID-19, and then looking at management's representations and fraud risks, because you actually have different fraud risks than you had in the past. So if we move on, we'll talk about physical inventory. So we have several clients that have June and September year ends. So obviously June 30th is only 8 days away. So those counts are coming up. So we've talked to them about what can we do to help and make sure this can happen, or if it can't happen, how would that affect the audit? So we've looked at alternative count dates. Could we count still in the audit process, but at a different time? So is their inventory static? So they have a June 30th year end, nothing's really happening in June, it can just sit there, there's no additions, there's no sales, anything like that. We've talked about looking at live feeds of security camera footage and then reviewing and receiving and shipping records as a possibility. Live video feeds, so if we could do something, say, over FaceTime, or however we can be interactive, so we could count and observe the count as the staff at the nonprofit organization are taking care of that. That can be tough to do if there's multiple sites, especially if those counts occur on different days, as goods could be moved around. It'd be probably easiest for counts that take a lot of, have a lot of big items, physically big items, versus something with very many small items. We have as considerations, obviously, social distancing and masks. So for example, we have a count coming up on the 30th where it's in a huge warehouse and there's only going to be 2 client staff there and 1 of our staff, and everyone will wear masks and gloves and stay apart from each other. And we think we can make that work while keeping everybody safe. And that's the main concern too. We can have a scope limitation in audit, meaning that we can't even count the inventory. So say all your staff are at home or your warehouse is closed, you just can't get in there to do the count yourself and for us to look at. What we can do as auditors is offer a qualified opinion, meaning that the rest of everything that we audited, your entire audit, that's the unmodified opinion, but we have a qualified opinion just on this one item, which is inventory, because we're just physically not able to test it adequately for the audit. If you're able to go to a reviewed set of financial statements versus an audit, then you can avoid that inventory count. So that might happen where you've got a bank that wants the audit. Maybe this year they would accept a review and your inventory wouldn't have to be counted. So that depends on everything as far as the state of Wisconsin and if you have requirements there, but ideas that you can think about if you are in a situation where you do have inventory. So moving on, accessing client records. So that's been interesting, I would say, so far this spring. As I mentioned, we did do some paper transfers with boxes and, meeting in parking lots and putting it on the ground and picking it up. And in the early days of when we first went home, that was actually a little unnerving, to say the least. And still to this day, we've only done that with a couple clients because most people do have everything electronic, or this experience has forced them to make everything electronic. It finally was the thing that propelled them to getting into a remote environment. The concern that we always have with scanned documents, how do we know it's the real document? Sometimes it's nice if they can do scans, but send us originals through the mail, and we can mail back and forth. We've done that this spring as well. Transfers of data is key as far as security goes. So make sure when you're sharing information with your auditor that somehow there's a secure way to do that, whether it's through them or yourself, so that when you're moving all this data, you're not in a situation where you're going to expose something to someone who can hack in and get at that data. So if you don't have that level of security, I am sure your CPA firm does, and work with them to make sure everything goes through that secure method, whether it's a portal or whatever it may be. With accessing records, another issue that we've come across, and this is just the nature of the situation we're in, people are working remote. People can be difficult to reach because all of a sudden they're taking care of their kids. They don't have a daycare to go to, or they're not in school. We have that in our own office as well, and it's just become more difficult. Things just take longer. And also considerations if we had a client that actually was ill, and to deal with that situation as well. Some of the things you can do if things just aren't working, is it possible to postpone the audit? Look, if you've got someone that requires the audit, could you contact them, see if you could get a waiver? Maybe they could get it 6 months from now versus in 2 months, that kind of thing. Or if you're an entity that has an audit, because that's the preference of your board, maybe this is a year that you don't have one, or you have some other type of service. And that's something to consider as well. If you don't have that external requirement with a hard due date, you'll have more flexibility if you talk to the people that do need to see your audit. So if we move on, talk about understanding and testing internal control. That's a very in-person, labor-intensive type of task that we take on. And it typically involves sitting down with the nonprofit organization, the staff, the executive director, and walking through the controls, and then literally walking through the controls, making sure that people, if they say they can log in, they can log in. If they say they can't, that they really can't. So this has been a little bit harder. I would say even harder than the inventory piece in some ways, because it's so much about observation and watching people do things. So we've had discussions with clients over Zoom and different conference calls to figure this out. We've looked at a lot of alternate procedures, because we're not going to be able to stand over that person and look at them log into their computer at their office because now they work at home or whatever it may be. So we're talking to a lot more people than we have in the past, more staff, more board members. We might even look at more third-party documentation, so do a lot more testing of, say, revenue and expenses that we've done in the past, and really utilize, like I said, those board members and see what they're aware of. What we're trying to get at is basically what we're told is confirmed by other people and then by other testing. One of the things that comes into play with internal controls that we've been running into, which is obvious, is people are working remotely, or maybe they're at half staff. Maybe people have been laid off. How were those tasks redistributed? Did you put controls in place to keep things safe as you would if you were all sitting in the office? So that's been an extension to what we've been doing with controls and in the past. And then if those controls really aren't in place, or they're not strong enough, making recommendations to help out the organization get to where they can really safeguard their assets. So looking at our next topic, confirming account balances. This probably is the easiest thing to do, and bank confirmations and things like that have been going on forever. We're finding, though, lots of times when we send out confirmations, they don't come back correctly. So people don't understand that we're looking for say a cash balance at a date and time on December 31st, for example. So they'll put today's cash balance. So the key here, and this is a lot of what we're just experiencing in general with remote auditing, is communication, communication, communication. So for the nonprofit organization to contact those third parties and say, hey, confirmation's coming your way, this is what it's for, we'd like you to sign it and send it back to our auditors. This really comes into play with pledge receivables, for multi-year confirmations of pledge receivables, where you have donors that are very reluctant to sign a piece of paper that just comes from a firm. They don't know if it's legitimate. And so that would be very helpful to have your part in that as far as a notification piece. And that way we can get more of that direct third-party evidence for the audit versus other procedures. And there are other things we can do as well. Again, with this, don't forget about security, making sure you're using secure portals to contact and send information back and forth. And then in addition to confirming account balances, if we're not getting back what we need, then we need to go in and talk about what else could we look at to make sure that what is being presented to us is accurate. So another issue that's coming up as we move forward is going concern issues. So this is a critical issue for many organizations and businesses. Will we all be around a year from now? What's happening to our organization? Are we losing funds? Jenny talked about the fundraiser, consistent from 2 years ago, which is great, but everybody is getting a little bit of Zoom fatigue. So we'll see how that goes. We also have to look at the disclosure of COVID-19 related events. So we've been putting in an uncertainty paragraph to make sure that the readers of the financial statements understand that the organization understands there's so much uncertainty out in the marketplace. So we really want to talk to you about what's happening. What are you doing? Do you have a fall off in contributions? Are you concerned about, say, Dane County or other government contracts coming through or being reduced? And did you have to lay off people? Are you dealing with less, but you have the same amount of work? What's the effect of the pandemic on the entire organization? And with that, we might have to modify the audit report. Say you're in a situation where you're very dependent on certain resources for funding that are just not there, or are there at such a reduced rate. And so we might have to put something in that says, we have concerns that this entity really is a going concern. And that means that you're viable a year from your financial statement date. So for those of you, just to make that very clear. Next, just talking about management's representations. So we may be adding additional representations in that management letter that management signs off due to COVID-19. If there's special considerations that relate to things you're representing to us that should be in that letter. So again, a little bit more work here on our part, but also lots of communication with you to make sure that we're getting in there what needs to be in there with respect to the pandemic. And also using electronic signatures. We've for years been PDFing things back and forth and using electronic signatures, but just to continue that practice as well. And then the final thing I want to mention with this remote auditing environment is to look at fraud risks. So when we, as you know, all of you that have audits, we talk about fraud during the audit engagement, and we typically perform inquiries. And unless there's something happening that you have concerns about, it's pretty general. But the concerns now are you've got a different situation that you're working with. So you have a remote workforce. There's maybe a lack of control over behavior. So for example, are people working like they're supposed to be working, or are they getting really concerned and they're getting stressed and they're being forced in situations where they may consider a fraudulent act that they would never consider in the past. Also, too, with the security of your site. So if a lot of you work at home and no one's at the office, who can get into that office when no one's there? Is there potential that your employee and other people you don't know can be in the building without you being aware of that? That goes back to the internal control piece as well. So developing controls of who gets in the office and when, how that works, what's the protocol, that type of thing. We did that at SVA, where if you needed to come to the office, we had a table outside and we did pick up, drop off. There were certain people that were in the office, very, very skeleton crew. Most people were not, but we had a process where we could keep receiving mail and shipments and deliveries, get information from our offices physically in the building through other people. So those things too, it all plays in that internal control and documenting that. Layoffs also make an impact on fraud risks. Now you may be doing the same work with less people. Things can get very stressful, as I said. Fraud cases typically happen in nonprofit organizations either because nobody's looking and it's easy to do it. The situation where the person has access to everything and nobody's really paying attention, or people can get desperate and might be in a situation where their spouse has lost their job due to COVID-19, they're on a reduced schedule, they can get in the office, maybe take something. So you've got to consider that how are your people feeling and how are they doing? The key here is to make sure that your assets are secure and that they're not leaving the building without you being aware, obviously. So these are a lot of different ideas of how to deal with a remote environment. Some of you may already have had your audits and maybe they were early enough in the year that you didn't have to deal with these considerations. But as time goes on, even if you had this year's audit and there wasn't a lot of change with the pandemic continuing, next year may look very different. And for those of you that are coming onto a junior end audit, August, September, whatever it may be, I would recommend if you're our client, work with us. And if you have a different CPA firm you work with them on these different ideas to make your audit go smooth and to get it done so that you can deliver it to whatever third party needs it. Just be creative and think about where am I at, what's missing, what's changed, especially with respect to internal controls and fraud and offsite work, and where are those holes that I need to fill and think through. So I hope these ideas were helpful. It's interesting for us too. We haven't gone through this ourselves, obviously, so we're getting creative. And one thing, even though we all have Zoom fatigue, I have to say I've seen my clients more than I probably would have. So that's been great, over Zoom at least. But like I said, I hope these ideas were helpful. And if you have not had your audit, I definitely recommend that you work with your CPA to work through some of these ideas. And then at that point, I'm going to kick it back to Lee.
All right. Thank you, Kirsten, and thank you, panelists. That was great. 3 very different topics, but very good information that we hit on very quickly. We've already had a few questions come in. I am going to open it up at this point to Q&A. So again, at the bottom of Zoom, you can click on chat and address your question to all panelists, and I will address those as they come through. One that came through earlier, actually. Jenny, we've got a couple questions for the event that you talked about. Somebody had asked about ticket prices, and it sounds like maybe you made some changes. You want to talk about that a little bit?
Yes, so we did. So at the very beginning, we kind of redid the budget, knowing that it would look different, you know, took out expenses like lunch and decor and redid it. And we really had to think about ticket price, because normally for that event, it's $125 a ticket, and that includes lunch and a book that you would pick up. And we changed it so there was a $75 ticket that was a ticket to the event and a book, or there was a $125 ticket, which also included a Wisconsin Book Festival membership. And you just get some special perks with being a member of the book festival. So we kind of did a tiered system. I would still say the majority of people did the $75 ticket, which is less than what we usually make. But there were a number of people who just bumped it up just to be philanthropic. And that was helpful to us to have kind of a couple of options available to our donors. We wanted to make it accessible to as many people as possible to do as an at-home sort of event.
Great. And then another one just came through for you, Jenny. Did you present all of the topics live, or was there some pre-recorded stuff that you had?
We did them all live. So the author event was live, which was fantastic. When we did the State of the Foundation, that was live. That was me talking for a half an hour. But we did all of those as live events, and we recorded them. So for those other kind of free events we did, we posted them afterwards. For the actual Mark Bittman event, we also recorded that, and then we sent out a link to people so that if people for some reason were not able to join the event, they could watch it later. Like I just got an email from Gail Ambrosius today saying that she watched it on Friday instead of Thursday, and she watched it from the link that we sent. So we will actually, it's only available right now to people who actually paid for that event. In September, we'll release it to the general public, that event too, which just adds more content. But all of our book festival events are recorded, so people can watch them. Like Stacey Abrams was on Thursday night, and a lot of people are watching that. I think something like 300 people have watched that since it was recorded on Thursday night. So a lot of people can go back and watch content that's recorded. I did on another, like kind of on a panel presentation, I did a pre-recorded one. It was a little bit different because we recorded it like 2 weeks before that event actually happened, and then just got on for like the Q&A. That was fine, but I think we've been presenting live events, and I think people like the Q&A part and like the interaction as if it's happening in real time. Right.
It's you can feel the difference. I've been on some of those as well. You might be able to avoid some glitches when you record it, but I feel like the attendees can feel it. One last question about your event. Jenny, if I heard you correctly, you said in years past, the attendance had been 400 to 500 people, depending on where you had it. This year, did you say it was down? It was down quite a bit.
Well, it was 400.
Oh, it was. Okay, I'm sorry.
400 people attend Thursday's event. So
gotcha. Okay.
Yep.
Great.
So it was a little bit down in the past. It was like 420 when we had it at Overture, and last year at Monona Terrace, it was 550. When we originally planned this event, like in January, we thought we'd exceed 600 at Monona Terrace. So definitely fewer people because it is a paid event. But like I said, I think in the big picture of things, we're super happy to have grossed, you know, $45,000 from a virtual event. We feel really very fortunate to have individual and corporate support to make that happen.
Oh, that's great. And then I'll address this to you, but really everybody. I'd be interested. You talked, Jenny, about your event that more people were able to attend that weren't in town, right? Because it was virtual. How do you expect, it might be too soon to answer this, right? But how do you expect these types of events to change in the long run once we do return to normal, if and when that ever happens? And then,
I'll just comment on our author events, because I think what's been great about recording them and presenting them later is we have had a lot of people come to watch those events at a later time. We will probably never stop doing that. We will probably, even when we go back to having live events, we will probably always record those events and post them afterwards. So I think it's taught us, like when we had to shut everything down and we didn't have content to share, like that was too bad because we didn't have video content we could share with people. And I think the fact that we're recording all of that now and people can watch it at later times is tremendously to our benefit. So I think we've kind of learned that there's no downside to recording it and letting people watch it either live or later as a streamed product.
Great. And then I'll ask the same question of Kirsten. You talked about some of the differences with virtual auditing. Once we are, again, I'm going to keep doing these air quotes, once we are back to normal, what part of that process do you expect to remain?
Well, that's a great question, because as we're finding, you know, we had some clients that are always paper and they've changed. They're like, we forced into doing this, and now we're so glad we did it. So there could be a lot more remote auditing and only doing things in person when we absolutely have to, because it makes sense. What we had been doing a lot too was doing the first couple of days of the audit in our office anyway, so that when we finally come to the client's office, it's much more focused on the key things we need done. And if we can do that remotely and the client is fine with that, that's fine with us. It's easier, it's faster, and you do lose that connection, but yet I think I'm finding though with our board presentations over Zoom, we're still connecting and seeing each other, and it's just a different way to do it. It'll be interesting going forward how you develop relationships and carry those on when a lot of it's video.
Yeah, that will be interesting. I think we've talked a little bit about how virtual fundraising is different. I wonder, and let's start with you, Jamie, here, kind of what you're hearing from your clients. What are you seeing regarding not just the, hey, I'm not going to these events, but is there concerns around economic uncertainty? And are you seeing that you know, bear out with your clients? And then I'd like Kirsten and Jenny to address that as well.
Yeah, you know, really what I've seen is really a refinement of kind of the fundamentals for a lot of people, which is to say, and just in the spirit of charitable giving, for most folks, I will say, you know, pre-COVID, let's just say, very rarely did I ever get any calls in March, April, May, June about, hey, let's do some planning for how I should give some charitable gifts. But this year I've had 5. And usually when we do that planning, that's typically at the end of the year. Now, all of these people were planning on giving gifts, but they've been much more interested in, again, maximizing their benefit while still making sure they get the same benefit to the charity. I've seen an increase in that kind of, again, just all the things we all know we should do, which is, you know, do some planning, think through some things, make sure it's the right move for you. But I've just seen mostly that thought process move forward in time.
I would just add that I also think on our side, we've also seen people taking a look at planned giving during this time. So they're maybe updating their wills or looking at their estate plans. So we've had a number of people kind of inquire about, you know, changes in their wills and things like that. So I also think just kind of this pause in time has given people a chance to say like, hey, I should talk to you about this, or I have some questions about that. And I just think that's maybe one of the natural outcomes of what's been going on lately.
Yeah, and for me, this ties back into the question you had for me, like, how do I think things will change? So I've already met with some clients where we were doing some of it remotely and basically on site, and had proactive meetings where we're talking now about what can they do, what can they download, document, where could they get, you know, resources electronically, versus their goal isn't necessarily that we never go to their office. It's to be ready when we say, here's the letter, here's everything we need. And they're like, yeah, we've got it all saved in this file. So it's just, let's have a process for that. Let's make it all, you know, virtual or PDFs or whatever you want to say, and just have it ready. And so that we can work on mission and everything we need to do as an organization.
I just want to add to what Kirsten was saying before about a nonprofit kind of changing some of their methods. I must say we had a pretty heavy paper trail before we went into this pandemic, and we have shifted. You know, we weren't doing bill pay online, for example, and we changed all that. We weren't getting all of our statements electronically from different banks. Like, we changed all that. So I think it has pushed us as a nonprofit to actually do way more things on a technological front, have, you know, many fewer things being mailed to the office as bills and stuff like that. So I think it's helped us actually kind of reduce paper waste and be more efficient by having the pandemic kind of send us all to our homes so that we had to do things in a new way.
Well, I'll say too, it can even alleviate, like, for those organizations that have segregation of duties issues, so especially like using bill.com, where you're taking all that kind of hyper focused staff out of the process and putting into a third party. You can structure controls around that, so you could maybe alleviate your segregation of duties issues, and then just the access and ease of finding things. I mean, you think of all the time, once you make the jump, the dive in, and everything's electronic, just be able to find things is a lot faster. And also people are using positive pay and different things with their banks and getting copies of their donation checks that way versus standing there at the copy machine making copies, which takes forever. So there's a lot of efficiencies that are getting built into this.
Great. Okay, a couple other questions that have come in before we wrap up here. We did have a question from somebody's cat, but I think we're going to skip that one. We do. I'm just going to read through this one, make sure I say it correctly. Somebody had a question about something that they heard in the presentation about the CARES Act. Is it true that up to 100% of cash gifts can be deducted from the AGI this year if over 59 and a half years old? Is that correct?
It is correct, but it's not limited to just 59 and a half. So cash gifts for everyone. If you were to give a cash gift for anyone, or excuse me, anyone can give a cash gift, and up to 100% of AGI can be deducted if you itemize your deductions. The reason we've thrown that IRA thought process in there, why is it connected to an IRA then? Why are you even adding these two things? Is because frankly, if people want to give and maybe they don't have cash in their checking account to give, you can get the similar net effect of possibly using a QCD. So again, it's about analyzing all of your assets as areas for possible places to give money from, and make sure that you're picking what's most effective for you and your family or household.
Great, and that really is the key, right? What's most effective for you and your household,
That's right.
which is hard to do on a webinar. Last question that came through, and Jenny, I think you're going to know what this means, I hope, but the question was, are you doing Ex Libris virtually?
We're working on a plan for that now. We're actually sending out a survey to our tasting partners. So that event brings together a lot of restaurants and a lot of breweries. It's usually about 30 or so partners of breweries and restaurants. And what we know for sure is they've been hit really hard by this pandemic. And so I think we always rely on their generosity to make that event work. And I think we're in just a completely different position of asking for that kind of favor this year. So we're actually just doing a survey of all of our partners to see what ability they have to participate in that event. And then we'll kind of make a decision from there. We are going to do it. This is the 10th anniversary of Ex Libris. We're just trying to figure out how we can do it. It will not be at the library. It will not be an event in which we congregate, but it might be something more that if you bought a ticket, we would send you a package and you would get to go to other places in the community to kind of participate in Ex Libris with your friends. So it'll look very different for its 10th year. We will do something, but we're just trying to figure out our restaurants and breweries and how we're able to partner with them in a way that doesn't hurt them.
Great. Okay, I'm sure it sounds like that is an update that people wanted to hear about. So I'm glad you're able to provide
It's a fun event. It really
Yeah,
is.
it sounds like it. That's great.
We'll do it again in the more distant future.
Great. Well, I want to thank our three panelists today. We are coming close here to an hour, so I want to wrap up. But thank you all for jumping on, for preparing today and providing such great insight. As we wrap up, I'd like to let everybody on the webinar here today know that SVA has created a resource page where the recording of this webinar will be located, as well as additional information and updates on getting back to business. So bookmark svaaccountants.com/back as a resource for you and your organization. As you know, or most of you know, I think, we've offered quarterly nonprofit roundtables for many years, countless years. We are in the planning phase of those now. We will let you know and communicate those out once our schedule and topics have been determined, and whether they're virtual, in person, all TBD. Again, I want to thank our three panelists today. I want to thank everybody for jumping on. So thank you for joining us. Hang in there and be well.
Thanks, Lee.
Thank you.
Thanks.
Thanks, everyone.